Hello, everyone. My name is Joseph. I'm the founder of Iron Key Capital. Welcome to the Iron Key podcast, where we go deep into the journey of founders and investors. And today we have the founder of Shield, a crypto payments processing company backed by A16Z. Welcome, E-Man.
Great to be here. Thanks for having me, Joseph.
So why don't you kick it off and tell us a little bit about your founder journey? I know you've been part of some NFT communities in the early days of crypto. Would love to just kind of get your background and how you got into the entrepreneurship space.
Sure. So I've pretty much been an entrepreneur since graduating high school. So when I was 18, I first started working on a business venture with some of my family members, my brothers and cousins. It was actually like a Nigeria-focused project in the agriculture space. Right now, that venture it's a food factory. Actually, we basically produce this type of like palm oil. Very, very different to what I'm doing now today. But that was actually my first venture, back in the day when I was in college. Now, the way that I eventually transitioned into crypto, I was pretty much like since like 2017, I'd say I was always a big fan of crypto. I always knew I was going to work in crypto in some way because it was just one of those spaces that like anytime I would spend time like learning about crypto, Googling around or whatever, it was just like a very fun thing to do. So I was like, okay, if there's some way for me to like design a career around this space that is like already fun for me, I'm sure like good things will come out of that. So, I just kept digging deeper, started like interviewing with different crypto companies post college. Didn't have a ton of success initially, and actually like joining exciting crypto startups because they all told me like, you don't have any experience, so sorry, we can't hire you. And I was like, okay, well, I'm trying to join your company so I can get experience. So I was in a bit of a catch 22 at that time. So I just figured, okay, if I can't join an existing startup to get experience, then like the only way I can get experience is by making my own thing. And at the time, this was like summer 2021 when the NFT bull market was just like roaring. And I started dabbling into NFTs and thought it was pretty cool. So I was like, okay, cool. Trading NFTs is interesting and fun, but degen behavior, that it is what it is. But if I actually like make my own NFT project, that will be a great way to get that experience that I'm missing. Who knows what's going to happen? I don't know like if this is going to be successful, but it's worth a try, and it's gonna put that like experience on my resume that will like enable me to get a job with one of these other startups. So that was the thinking. So I started my own NFT project, started working with my best friend on that and my brother, and we launched in February 2022. So it actually took us like 6 months to launch the project. We initially had expected to launch in like 3 to 4 months. After those 3 or 4 months, I quit my job. First of all, I kind of forgot to mention that I was working at McKinsey doing consulting, and I quit my job to do an NFT project full time, which like, if you asked anyone who I was working with at the time, they would have told me that I was crazy, that it wasn't going to work out. And even me myself, I wasn't super confident that it was going to work out, but I was confident that like this is a step in the right direction. When we eventually did launch the project, it did do well. We did almost like $400,000 in NFT sales, which was, far more money than I had ever seen. We could talk more about like how that happened and what were the factors that led that to be successful. But long story short, just continuing to just like hammer in and spending the late hours, building up an NFT community, putting time into like the art, just all the different skills that like I had accumulated over time in my previous experiences, both like the previous startup as well as like McKinsey and even like going through, my time at Princeton. All of those different skills kind of like came together, and we were able to get like a pretty successful project off the ground. From there, we basically realized like, okay, cool. We made this NFT project. It's going well. Now we're like hosting these like community events where we're hosting like art NFT gallery events, shining light on like the artwork of artists from Latin America and Africa. That was kind of like the whole focus of the project. So we were doing kind of like interesting and impactful work. But at the end of the day, we were basically competing with like the Bored Apes. That was like our benchmark for success. Was like, okay, how much can we increase our floor price? How many people can we get to come to our events? Like that wasn't necessarily what I was interested in doing when I first said like, hey, I want to be an entrepreneur in the crypto space. It wasn't just to like host events and compete with the Bored Apes. It was to like build real technology that can, like help a lot of people, impact a lot of people, and kind of be like self-sustainable without me having to like be the person hosting. At that point, we basically just started like looking into what are big problems that people are facing in the space right now. And we looked at our community first and foremost, and we said, okay, we have all these people that we've brought into the crypto space, but it's not enough to just bring people in. You have to actually try to like make sure they are successful, and that they don't get like scammed, they don't get hacked, right? Because those are the types of things that lead to people like leaving the space and not wanting to come back. Fast forward a few months, and what we ended up doing is kind of transitioning our project, which was called Ancient Warrior. The logo of the project was like two swords crossed like this. We ended up transitioning that project to a security startup, and we called it Shield. And the whole goal with that was like, okay, let's build technology that will protect the people that we've brought into the space, make sure that they don't get scammed, make sure they don't get hacked, so that they can actually be successful and have longevity within the crypto space in the long term.
Yeah, that makes a ton of sense. I definitely resonate with the whole concept of, if you can't find a door, you must build one. I feel the same way about, entering the space in 2017, but my experience was in the ICO space, so it was a lot of the similar ethos, right? How do you protect these people from getting scammed when it's really just you're running an illegal crowd fund, and none of these ICOs are really building really any sustainable technology back then, and the space has come a long way. A lot of growing up to do. So definitely understand the origin story. So tell us a little bit about the security product and the original vision and how that led you to your pre-seed round.
Yeah, so we were building security. We basically started looking at, okay, what are all the different avenues that people can get scammed or get hacked, get exploited. Discord was one of the main places that people were clicking on, like scam link. Someone would say like, oh, hey, like new token, just the most basic stuff, right? Like new token is dropping, here's an airdrop, go to this link and check it out. Then someone goes to the link, connects their wallet, and then like their wallet gets drained, right? Like nowadays it seems super obvious, but I'd say back then, like a lot of the people that were like rushing into the crypto space, these were people that were not familiar with this type of stuff. So it wasn't really a surprise to see people getting scammed left and right. We built like a basically like a detection system that would flag scam links. We built like a Chrome extension that would like follow you around as you're browsing. So if you like click on a scam link on your like internet browser, it would get flagged and like redirect you to a safe page. That was kind of like the initial thinking. The problem with security at the time for us was that like we had difficulty actually getting people to pay for the solutions, right? Like everyone said like, oh yeah, it would be good to have security. Like I would love to have protection, but no one really wanted to pay. Like generally what you see in security is that people are willing to pay after they get hacked, not before. So that's what we were seeing. So we kind of were pivoting within the realm of security. And all of this time, we were also fundraising, like you mentioned. Like my co-founders quit their jobs as well. So we were like, all right, well, we quit our jobs prematurely. We need to like make sure we have some capital in our pockets. So as we were like trying to figure out, hey, what are we going to be within the security landscape? Yes, we know our name is Shield. So that kind of like, centers us within the realm of security, just given the brand, but we're not like beholden to the first thing that we chose, right? Like we know that we don't have the answer today. So the more that we can just kind of like iterate, try new things, get people to test our product, and learn based off of like the feedback that we're getting, the faster that we'll actually get to the right answer. So during that process, we were raising, we ended up having like, I'd say like a pretty difficult time raising, even though the end result was a positive one. You have to keep in mind that like literally the week that we started raising, the Terra Luna collapse happened. Worst thing in crypto that happened in, I think it was 2022. At the time, this was like the worst thing that happened, right? Regardless, we kept pushing. We continued having conversations. We got a ton of no's. And we got a very, very, very small amount of yeses. The yeses that we got were enough to keep us going. And at this time, like we had also moved to Ecuador, which is where my co-founder is from. That was like a decision to just like decrease our operating costs and basically like make our runway pretty much infinite, because there was a point where if we needed to, we could have just like gone and lived in like my co-founder's like family's house in Ecuador that has virtually no cost. So that's like the type of founders that we were. Like we just kind of refused to die. So that happened. We were kind of steadily raising, not doing that well. So we would have to go back and, hey, let's make more progress on the product. Let's build out this the technology a little bit more. Let's get some more users. So we would do that, and then we would come back and start fundraising again, and kind of see like, all right, are we going to have more success this time? The second time we kind of like came back to fundraising was November 2022. And that's when the FTX crash happened. All the investors that we were speaking to at the time, and some of those conversations were going well. People were like, okay, yeah, like, we'll give you a decision next week. The FTX thing happened. And then, we start to hear from the investors, sorry, we have to focus on our portfolio companies. We have to make sure that our own portfolio companies that like lost all their money in the FTX collapse, like don't die. So that was completely understandable, but just like not like a great position to be in for us. What ultimately kind of like started to twist the narrative around and led to us like actually having success in our pre-seed was, first of all, we managed to secure a check from OrangeDAO. We had a really good relationship with them because my brother, who's one of my co-founders, he was working with them in different capacity. He was part of the DAO. So that check ended up coming in, and that was like our first VC check for 100K. And then the second check that came in from a VC was Andreessen Horowitz for their crypto startup school accelerator program. So that was a $500,000 check that came into the round right before Christmas. So it was kind of like an early Christmas present. And then when we came back to work at the end of the holiday season, and we kind of followed up with all the different investors that we had spoken with. And by this time, like we had gotten like 100 no's, you know what I mean? Like we had really put in the work. But yeah, when we came back to a lot of those investors and started letting them know, like, hey, this is where we are. We managed to secure these VCs. Let us know if you're interested. A lot of these guys were excited to have another conversation with us. What progress did you guys make? What made A16Z say yes to you when I said no? Right. So yeah, we turned a new page in the new year, and by February, after a month, just kind of going through formalities and due diligence processes and things like that, we managed to secure a $2.1 million pre-seed round. So yeah, things ended up coming together quite nicely, fortunately.
Yeah, and I think you touch on some important points when it comes to just the founder mindset, but also the focus needed. There's something to be said about, some people give the advice of always be raising, and there's some truth to that, depending on how you go about it, I think, to some extent. But at the same time, I definitely agree with the strategy of going out to raise, collect feedback, and then see how the market responds, and then almost go back into hiding for 3 to 6 months, build out the product, and then do essentially another wave, because you can certainly get burned out with fundraising, and it's almost hard. It's not easy to navigate that feedback, especially when you're getting no after no after no, and that will burn you out. It's almost like a happy medium between ping pong balling your focus between raising and the product, and that's where just having a strong co-founder really helps.
I would even just add to that saying of always be raising, it should be changed to always have money, which doesn't necessarily mean that you must be raising. If you can raise a lot of money and like that puts you in a cushion position where you don't have to raise for the next 2 years, fantastic. If you can't do that, then hey, like go move to Ecuador or move in with your parents, right? And figure out a way to ensure that like you're not going to die as a company.
Yeah, and that's it's the number one job of the CEO, is to make sure there's money in the bank. I think there's just not enough founders out there that are willing to kind of do that. It's more like a glorified approach to being a founder. I would say just very few are, just willing to do what it takes. And sometimes you have to cut your burn to zero, and that's what it takes. That's really what will get you past the dog days, or when it doesn't feel like there's any hope. Great to hear that's a story of how you go from basically 0 to 1, and you just come out the other side as long as you just keep learning and don't give up.
Absolutely.
Why don't we pivot, pun intended, into The journey, once you raised the pre-seed round, how did your mindset change? And how did you go from a security focused product to where you are now with Shield?
Yeah. So the interesting thing about all this is we felt like, we started our company May 2022. It took us like almost a year to finish raising that pre-seed round. But in reality, we really started after we closed that pre-seed round. That was the actual starting point, because once that round closed, it was like, okay, well, we have the money now. We have these people behind us that are expecting us to do all these great things. Now, okay, what do we do from here? And so we actually like sped up our iteration kind of cycles, where we would pivot like almost on like a monthly basis. Sometimes even like shorter than that, where we would say like, okay, let's like build out this product. Let's test it with people. If we see the type of like demand and interest that like warrants us continuing to build it out, then we'll do that. If we don't see that interest, let's pivot as fast as possible. The longer we stay in this zone where we are basically like, pre-product market fit is the best way I'll say it. As long as we're pre-product market fit, like all we're doing is just like continuing to die as a company. And that's not what we want, right? I talked a little bit earlier about like link detection, the Chrome extension. We started building like smart contract auditing solutions. At some point, we started building like a post-hack investigation solution, because I mentioned earlier, like people don't pay for security before they get hacked, they pay for it after. So we tested that theory. And in some part we were right. Like we actually did manage to close our largest sale, like by far, closed like a $15,000 sale for a post-hack solution. But actually providing a solution like of recovering someone's funds after they get hacked is quite a difficult thing to do, regardless of whether they're paying you or not. We didn't necessarily come from like a deep security background. Your optimal security founder is someone who like was a hacker themselves, or someone who was an ethical hacker. People who have real robust security solution, they can kind of like build a team of hackers around themselves because they already have that network. They already have that like exposure. That was not us. That was not the background that we came from. At some point, we did decide that, hey, like, guys, we've spent over a year pivoting around within security. We've basically done every single thing that you can do in security. We've tried everything. We're not seeing that product market fit. Like people don't love our product. People aren't like begging to use it. People are not like throwing money at us to the point where we can no longer handle the demand coming in. That's not happening. So we decided to actually take a step away from security. And this was actually like a difficult decision to make because, again, like the brand, we're still called Shield, right? The brand is so oriented around security. All of like the press articles that come out about us were all focused on security. So it almost kind of felt like we were sacrificing or just like giving up like a very strong part of our brand and story that we had built up over time. But at the end of the day, like how we justified it was like, okay, we can keep doing what people expect us to do, and then die in a year or 2 years, or we can, pivot and try some new things. And at first, people might not like it. They might tell us like, oh, why are you guys doing that? I invested into you because you're a security company. You're not doing what we thought you were going to do, right? Like at first, people might not love like this transition, but at the end of the day, the volume and the traction is what is going to silence everyone. It is what is going to like bring everyone to our side. Is like when we actually like see the right type of volume. So all we need to do is be successful, and all the other problems will be solved. A friend of ours who runs a Y Combinator company, there was a day when like he came to us. He exports cell phones. He runs like a cell phone marketplace for exporters and importers. So he told us one time that like, hey, I have these customers that want to pay me in stable coins, but I don't really know how it works. I've never like received payments in crypto before. I don't want to have to deal with like liquidating that crypto for cash. I don't know what to say to the IRS if they come to my door and ask me about this payment. Tell me what to do. And what we told to him is like, hey, why don't we accept that crypto on your behalf, and then we'll just send you a wire, right? Like, so you don't have to worry about like anything on the crypto side. We'll take the crypto. We're a crypto company, and then we'll just send you a wire. And he was like, yeah, cool. Yeah, let's do that. And so we did that with him. And then after that first transaction, he started like essentially leveraging us as his go-to crypto payments partner. Skip ahead like a few months later, and like we had done over $300,000 in transaction with this client. This was one client. This was like a startup company. It wasn't like a huge company or anything like that. The level of volume that we were seeing with just this one guy was, I dare say, like 1,000x of what like we had previously seen in any other product that we had built over like the previous year and a half when we were building security stuff. So it was so obvious, night and day compared to like the previous things that we had built, that we needed to continue digging into the space. And we just figured like, okay, hey, if we find like one more client like this or two more clients like this, like, this all of a sudden goes from 300K to $1 million. And like, we have like a real business opportunity on our hands. We just essentially like followed the volume. We followed the signals. We kept going deeper into that space. We are not a team of founders that have like previously built a payments company. So it definitely was like and it still is like a learning journey for us. Like every day we're learning new things about payments. We were learning about like, okay, how to be compliant within this space. One of the biggest differences between like building like a security solution versus like now going into the payment space is like security. Like anyone can build a security solution. You can like, get people to test it and give you more credibility. But like ultimately you don't need like a license to build like a security software. Anyone can just build that software and put it out. But when it comes to payments, exchange, like that entire space is just like riddled with compliance challenges and like compliance walls, right? Because as soon as you're starting to get into like payments, are you a bank or are you an exchange? What like category of these different things do you fall into? And based off of which category you fall into, you're subject to different regulations. There might be a requirement for you to have like an exchange license in order to do this type of work. So that was like a whole new bucket of like focus that we had to move into, just like compliance. And so even now, we do have a crypto exchange license that we got in Europe, and we're registered as a money service business in the United States. And we have to keep moving in that direction of like securing different licenses, working with other partners that already have licenses so that like we don't have to get every single license in the world, just to like have access to these different types of customers. Largely just have a very, very strong like compliance program in place. Because if you don't, right, like probably a couple different things can happen. One, your bank accounts can get shut down. Two, your company can get fined a lot of money. Three, I can go to jail. So a lot of positive reasons to like make sure that you focus and invest a lot of time and money as well into compliance. And even today, it remains like a really, really big focus of ours.
In summary, you pivoted to an everyday problem and that a problem that people are willing to pay for. I think that's kind of what resonates with me. On the compliance front and or beyond, is compliance your biggest challenge, and what other challenges are you experiencing now that you're really trying to go into growth mode or achieve scale, and that comes with a different set of problems rather than finding being pre-revenue and pre-product market fit. So I'm curious around the challenges you're experiencing now.
Yeah, so I'd put them into two buckets. So one is just like go to market, finding and closing customers, and then the second is compliance. So if I start with like finding and closing customers, yes, like so there's a lot of crypto exchanges out there. There's a lot of on and off ramps. Like there's hundreds, right? So like it's a very saturated market. So you can't just say, oh yeah, we help you accept crypto payments and think that people are going to run to your solution. So the challenge is really like, how can you find a specific segment of companies? Maybe that segment is like a country. I'm in Argentina right now, so maybe it's like, people in Argentina. There aren't a ton of on and off ramp solutions in Argentina right now, and there's a lot of people that need access to that solution. So if we focus on Argentina, we have an edge there. Another like way of thinking about segments can be the industry, right? I mentioned earlier that our first client was in the smartphone exports business. We continue digging deeper and deeper in that industry, and today, like our biggest clients all come from that industry, and we have like purposely made investments in just like going to different conferences centered around, the smartphone trade industry. We went to a conference in Barcelona back in March. We went to another one in Miami in September. And this month we went to one in Dubai. And each time we've gone to these conferences, we've literally seen the same people, and they'll recognize our face. The first time they met us, they were like, "Oh, are you guys drug dealers?" The second time they met us, they're like, "Oh, okay, well, I've seen you in Barcelona and I've seen you in Miami. I don't think that you would travel all the way across the ocean just to like sell me some drugs," right? The third time they see us in Dubai, they're like, "Okay, you guys are very serious. You guys are licensed. Tell me more. Let's talk." It has been a very long process to closing some of these customers in this space. But what that tells us is that it is actually, it's a great way to build a moat, right? Because this is a space that is like a very, very closed community. A lot of the people know each other. They know each other's families. You have to have a lot of trust in order for them to work with you. So just like them seeing your face a lot of different times and you like making that effort to go and like take them out for dinner and things like that. Those are the things that have helped us to establish trust with people within this space. And so right now, like we are continuing to just like double down and focus within the electronics space. Actually, on Wednesday this week, we're doing like a wine tasting event here in Argentina for companies that work in the electronic space. Once we get to a point where we feel like we've like saturated within this market, we can look for other similar markets that also have like a very high trust barrier and are more traditional, and people kind of are like more skeptical about crypto, but there is some kind of use case for them to accept crypto as a form of payment, right? Like we can find other industries that like meet those characteristics and form like a moat around those types of industries. I mentioned that as a challenge, but it is also an opportunity in a lot of ways, and that's how we tend to look at these types of things. Like the hardest things to do, if you can find a way to do them efficiently, that becomes like your competitive advantage against like all your other competitors.
I'm curious around, you hyper focused on the niche that was working, which makes sense. And a lot of founders kind of get distracted with red herrings or signals about what they should be going after. But you essentially kind of flip that on its head to focus on serving those customers, that serving that niche specifically. So can you just tell us like a little bit about like what are those unique like value drivers or characteristics that the electronics market within B2B crypto payments, like what are some of the nuances there that those customers need relative to just, the general B2B payments market?
So it's a few things. One is a lot of those companies are doing international payments. For example, there's a lot of those companies that purchase their supply from Hong Kong, but they're based in the US, right? So that's like international payments that need to happen there. And then in a lot of cases, they're exporting their cell phones from the US to South America, right? So that's another international trade flow that's happening. And in both of these cases, they are subject to international wire fees, which tend to be quite high. You might have to pay like $75 or $100 or more in order to get like a swift international transfer processed by your bank. Sometimes there's also like just delays in those transfers. They might take a long time. And particularly for the Latin America situation, for them, like they are facing additional fees from their banks that say like, oh, okay, well, because I'm converting your currency from pesos, Argentinian pesos to US dollars, I'm going to mark up the fee by like 5%, sometimes like 10% or more, to the point where it just doesn't make sense whatsoever. So you find that the companies that are buying the cell phones and importing the cell phones in Latin America, they will use USDT because like they literally just cannot use their banks. Like it would just completely destroy the margin. So, right. So they want to pay in USDT. The companies in America that are exporting to them, like they still see stable coins as like kind of scammy. They see it similar to how you would see like cash. They're like, oh yeah, I wouldn't accept like cash as a form of payment. I don't want to accept crypto either. Like I just want to get a wire in my bank at the end of the day. So just that like international payment flow and like the difficulties that come with it is like one of the biggest reasons why this space in particular it is like a very, very suitable one for crypto payments solution. And I would also just say like the size of the payment, they're not sending like a few $1,000s. It tends to be in the tens of thousands of dollars and the hundreds of thousands of dollars that they're moving. And the good thing about crypto payments is it's kind of like a flat fee. If you're sending like a stablecoin transfer, it's not going to be like a percentage fee, right? It's just going to be like, you know, $3 of gas each time. It scales really, really well when it comes to large size payments. So yeah, all of those qualities we've seen, it makes crypto payments like really, really attractive to people that work in this industry.
It makes a lot of sense having two sides of the customer that each have unique challenges and building a solution to that marries the two. So, Eman, tell us what's next for Shield as we go into 2025. What are some of the things you're looking forward to, and what's next for you?
We've just gotten to a point where we're starting to see hockey stick level growth for our company. It took us 9 months from the point when we first started working in payments. It took us 9 months to hit our first $1 million worth of transaction volume. And then the 10th month, we hit our second $1 million, right? So you can kind of think about how our volume curve has started to accelerate. By the end of this year, we're hoping to be at 5 million. We're really continuing to just like keep our foot on the pedal and pushing hard there, really trying to keep the momentum high at this point. In terms of next year, we're hoping that early next year, or maybe in the first half of next year, we'll be at a pretty strong place in terms of like saturated a good portion of the volume within the electronics market. It is actually a very, very big market. So like when I say like saturated a good portion of the volume, I more so refer to kind of like the specific community that we've been seeing at like these different events that we've been going to. There's kind of like a community that like knows each other. So if we can just kind of like be the go-to crypto payment solution within that community, like that's like a very, very good foothold for us. And then we can expand from there. But also, you know, we are starting to see some opportunities to accelerate as well in terms of like getting additional licenses that will give us like much broader capabilities to service more clients, because we are actually running into situations where we'll have a client that wants to do business with us, and he might be in a jurisdiction that like we can't really serve because we don't have the right partners or we don't have the right license in place. And so like those types of opportunities are just like, you know, there's certain investments that need to be made there. So we're thinking like at some point next year, we're gonna need to raise a little bit more money just to kind of like accelerate, start going for those larger investments that will lead to you know, our growth really getting to the heights that we know that we can get to. So we'll see what happens with that. Don't want to say too much there just yet, but probably Q1, Q2 we'll start to kind of ramp up in some of our investor conversations, just pending, you know, our volume being in a great place as well.
Fantastic. Sounds like getting that one foothold in the electronics market will, you know, allow you to start servicing others when you're ready. So seems like the future is bright. Thank you, Eman, for hopping on the podcast. Please tell the audience where they can find you on, you know, Twitter, LinkedIn.
It's been a pleasure, Joe. I appreciate you having me on as well. Please, yeah, feel free to search getshield.xyz, or you can search shield_xyz on Twitter. I'm also on LinkedIn, Emmanuel Udetong. I'm always available. Happy to chat.
All right, awesome. Thanks, Eman.